Andy says he is excited about the future. Let's talk to him. Andy, thanks for coming through. Let's quickly go these historical numbers. You really weren't obliged to produce these numbers, but you know, to present at least something that is good, and also, you know, good governance, you've decided to produce the numbers anyway. Revenue is down, but headline earnings are up. Just give us a quick take what that was due to.
Yeah, look, I think if we go back to the start of the crisis in October 2008, there's no doubt that the tourism sector was very hard hit. Essentially, tourism spend became totally discretionary, and people, you know, turned off that tap. You know, the question is, how did we react? Well, the bottom line is that we could only really consider internal factors at the time. We became inwardly focused. We looked at our cost base.
Right.
And essentially, in the course of last year, we realigned our business to a low level of demand, which is exciting. And that's reflected in the results. You'll see that our fixed cost base is 13% down on last year. We targeted last year minus 10%. And our GP has gone up from 44 to 48%. So I think, you know, from that point of view, we've done quite well.
Right.
From a revenue point of view, well, there was very little we could do on the revenue side. We were out in the market. We were trying to, you know, we felt that the tourism cake wasn't going to increase, which it didn't. In fact, it was more than likely going to decrease in these times.
Sure.
And so we just tried to increase our market share. So we had quite a strong marketing effort. We managed from a real point of view to remain flat. From a nominal point of view, we're 12% down, but that's the impact of the exchange rate. And I think if you translate the saving on our cost base, we've got a 9% increase in our EBITDA, which we're quite excited about.
Yeah, let's just talk about those headline numbers, because the headline earnings numbers, which the South African market focuses on here, headline EPS is now 20.4. That's versus a loss the prior year.
Yeah.
But you were explaining to me that it's really here the impact of foreign exchange movements.
Yeah, look, I mean, I think as a business, we earn in dollars, or a large portion of our revenues is foreign exchange earnings, and as a result of that, we borrow in dollars.
Yeah.
So it's an internal hedge. And what's happened with the volatility in the currency is that we've had a huge profit the year end February, the year end, or a huge loss February 9 and a huge profit February 10. And if you take those out, you'll get a better picture of the business from a performance point of view.
Yeah, actually the numbers showing the previous year, it was a loss of 32 million rand, and versus a profit of 24, so a huge swing there. Yeah. But let's talk about the conditions that you're seeing now down in the market. Now, the picture that we're getting from the rest of Africa is that things are beginning to improve, particularly if you look at East Africa. We saw some numbers coming out of Kenya, we saw some numbers coming out of Mauritius, suggesting that there is a pickup. Are you seeing it? Are you beginning to see it in your regions?
Yeah, there's no doubt. I mean, we are seeing growth. I mean, you know, our order book, we're quite well measured as a business, and our order book is indicating that there is real growth in beds. So, but one must understand that that's relative to prior year.
Sure.
Relative to our best year, we're still behind the curve. So there's no doubt that there's a pickup in earnings. I think you're going to have some good months and bad months.
Yeah.
It's still very short term. You know, the market's still reacting. For example, to the sovereign debt crisis in Europe and things like that. So we are expecting growth to be tempered, but we are experiencing growth, which is exciting.
What about the fillip coming out from the once-in-a-lifetime opportunity, the World Cup?
Yeah, look...
Isn't there?
Yeah, no, look, I mean, I'm very excited personally about the World Cup. I mean, you know, my family, myself, it's a wonderful event. Sure. And I really hope that South Africa hosts it very well, and it all runs smoothly. I think that the direct impact on the World Pack relative to the 2 months during the World Cup for us is, you know, we're probably going to do worse than we did last year.
Right.
The reality is that our traditional customers not really going to want to travel at these times. So we, a year ago, put together a team to open up new channels to the market. We wanted to fill those gaps with new channels. Okay. And we've been very successful in some areas of our business, but in some areas we haven't. In South Africa, funny enough, we're not doing that well, and Namibia, we're not as good as the prior year. Okay. But Botswana, which is a big part of our business, we're up. So we'll have some good and bad news in this time.
Yeah. So what is important about the World Cup from your perspective? It's not really the visitors who are flocking to watch the World Cup. It's really the brand of Southern Africa that's going to be lifted over the region over in the coming years.
Yeah, I think absolutely. I think it's going to be post-World Cup, and hopefully if we host it well, we'll get a lot of good, positive PR out in the market, and, you know, in the long term, it'll increase, you know, our tourism return. So we're excited about the long-term benefits of the World Cup.